It's TA with MK. It's TA with MK. Gents and ladies, no time to waste. Don't be afraid, it's time to trade. Let's start your brains like high-speed trains. Storm these games like hurricanes. It's time to save this herd this days. Put on your cape and learn the phrase. It's TA with MK. It's TA with MK. Alright, boys and girls, it is time to talk about the elephant in the room. What's that? Oh shoot, there really is an elephant in the room. Dang, well, wasn't expecting that. But besides that elephant in the room, we need to talk about the Bitcoin price and realistically where I expect that it could go over the coming weeks to months. As far as downside targets, obviously, there's always bullish hopium that exists, especially in the short term, as Bitcoin is very, very oversold at the moment. And we're also going to discuss that in the coming days, some potential trading strategies involving that. But in today's video, we want to focus just exactly where I am targeting to potentially start reaccumulating Bitcoin or opening up long-term holds on Bitcoin. So we'll discuss that. If you guys are liking the content, please remember to like and subscribe, and let's go. Now, to start out, I want to be very upfront in this video that this is not at all short or even necessarily like midterm predictions. And really, it's not even predictions, period. Bitcoin will do whatever it wants to do regardless of what I think. But, it's just educational purposes and kind of what I foresee. But the reason why I wanted to mention that is that right now, at the time of making this video, Bitcoin's sitting at around 36,500. It broke down today, but I'm not posting this video until tomorrow, so I don't know what Bitcoin's going to do between now and when I actually post the video. So this isn't anything to do with what I think Bitcoin's going to do over the next 24 to 48 hours, or even the next 2 to 3 days. This is more what I would expect over the coming weeks to months. And to start out, I want to show you guys the DXY. Now, I posted this on my Twitter account today. The DXY is just a chart that represents the strength of the US dollar. And over time, it's been a very good gauge of what to expect from stocks. And crypto's just a stock, right? But Bitcoin's just essentially a meme stock for, institutions to trade. But it is just a stock at the end of the day. So whenever the dollar is strong, then stocks tend to pull back, right? And I shouldn't even say tend to, they just do. Over the course of history, whenever the dollar strength has gone up, stocks have gone down. Whenever this has gone down, stocks have gone up for the most part, right? And so I just wanted to kind of show this chart. This is the monthly chart, and on my Twitter today, I posted a RSI comparison for the different time frames for the DXY, just kind of showing that it's starting to reach very oversold levels on a lot of the higher time frames. But one thing we do know about overbought, I meant. Not oversold, overbought. One thing we know about overbought or oversold, especially when it comes to higher time frames, is that it can stay there for an extended period of time. So to expect, we're oversold or overbought in this case, for it to pull back right away is a little unrealistic. It can definitely make one last push higher. In fact, a lot of times when a stock or crypto even goes parabolic, as they say, it's often when it is at the highest overbought, overbought levels, right? It makes one last little parabolic pump, and then you finally get that retrace that you're waiting on. So more or less, I just wanted to kind of show this chart. This is data dating back, even this low back here. This is clear back in 1980. So I mean, this chart's got a lot of data. So this is the 80s. Then this pump up here was back in 85, then the pullback, this was 92. And then on this chart, I just wanted to show that this little blue box represents the last time that inflation was as high as it is right now. So I read an article today just kind of confirming that with this most recent rate hike of 0.5, that now we are higher, or as high, I think they said higher than we have been since 2000, which was one of the last big crashes in the stock market. And this kind of just represents January of 2000 all the way until this peak of 02. So this represents this little period of time here, which was about a 15% pump for the DXY, represents the last time inflation was as high as it is right now. And we're, at that same level of resistance, that it was, resistance here in 2000, and then it broke through it and pumped up to this level. And we're at that same level. So what I'm looking for is just very simple. If this breaks out, retests, and pushes higher, bad for stocks, right? If this bearish retests, and maybe the overbought levels do take precedence and it's able to meet resistance and retrace and come back this way. Anything this direction, obviously to the downside, is going to be good for stocks. So just kind of want to start out with that before we move on to some Bitcoin charts. Okay, and then that brings us over to the RSI chart that I posted on my Twitter today for Bitcoin. I just wanted to quickly cover this just so that you can kind of see my mindset as far as why I'm not necessarily saying that any of these price levels that I foresee possibly happening would happen right away. In fact, I would expect some sort of a little oversold bounce out of Bitcoin in the near future, and I'm even going to post a video where I plan on making a trade. I haven't decided on the coin yet, but what I'm waiting for is, so this is the 1 hour, 4 hour, 12 hour, and daily. And this is a chart that I keep up all the time just to kind of keep an eye on when I think Bitcoin, or altcoins, honestly, would be a good time to trade, right? And if you look here, the 1 hour is about 24. I like to see that get down below 20. It was recently below 20, but of course, if Bitcoin pulls back more, it should go back down there again. The 4 hour is at about 30. I'd like to see it get back down here to around 20. And the most important one is the 12 hour, to me anyways, for my trading strategy that will involve the oversold bounces. And right now it's at 34. You can see this is my box for the oversold target zone that I'm looking for Bitcoin to maybe make a little bit of a bounce of at least, 3 to 5% potentially. Just because levels reach oversold doesn't mean Bitcoin's going to then moon, and head to 100K. In fact, often it's just a relief bounce, and sometimes that's only a few percent. Sometimes, it leads to more, but at the end of the day, it is very common for Bitcoin to at least bounce at these oversold levels. And then on the daily down here, we're at about 30. So ideally for me to open up a long trade with, some leverage and have confidence that it could get between a 15 and 20% gain, I would like to see the daily get down into this box at just below 30. I'd like to see the 12 hour reach down here below 25. And then of course these 1 hour and 4 hours to probably be 20 or lower. And I think that would represent an amazing time to short-term trade Bitcoin, but that's not what this video is about. And so we're going to hop over to this daily chart for Bitcoin. Now, this is just a cleaned up version of a chart that I've shared on my channel often for Bitcoin. I just kind of stripped it down to the skeleton, added a few of these, I would call them kind of like zones, demand and supply zones. Essentially, Bitcoin, ever since it broke above 20K back here, actually, I guess right here where it broke above 12K, 13K, it went on this parabolic run, right? And it's essentially in somewhat of a bull flag. An actual bull flag should be angled like this. So that's actually more bullish. This is more of a rising channel, which has a 68% chance of breaking to the downside at some point. And a lot of people like to point this out that, hey, the target for this then would be clear down here at like 14K or something, ridiculous. And of course that could happen, especially black swan event, or if inflation, in the war and all that just turns out to be a lot, drug out a lot longer than expected. The economy, suffers more and more. Of course, anything can happen, so it's always good to have a plan. But essentially, I would expect, even if it does break down, that it's going to get bought up, And so this is kind of what I've been eyeing down. On a previous video where I covered kind of zoomed out charts, I had mentioned that historically when Bitcoin has its low in a bear market and its top, that it likes to retrace to about the 382. And that's just a fib level, right? And it's going to retrace around 40% of the move from bottom to top. And where I'm coming up kind of with this zone that I'm targeting. Now, if you just pull up your fib retracement tool and you go from the COVID crash back here in March of 2020, that bottom to top, your actual 382 is clear down here at about 23,000. And a lot of people have been talking about between 20 and 24,000 as being the bottom. I have a little bit more of a conservative, I guess, target. Or maybe aggressive, actually the opposite, be aggressive. I have an aggressive target. What I did is I turned off the candles and just went line. And I said, or thought to myself, hey, this was kind of a black swan event. This really, I would imagine, would have been the bottom for Bitcoin right here if it wasn't for this final last dip that happened because of COVID. And so the way I look at it is, if you take it from that point and want to get a little more of an aggressive entry where you front run the potential breakdown or pullback, I'm looking at the 382 as kind of being here closer to the 28,000 range, like, between about 26,500 and just over 28,000. That's where I would start DCing in, dollar cost averaging, into some bigger positions with either Bitcoin or, of course, some altcoins, some of your, top 100 blue chip altcoins, your atoms, your dots, ADA, hate to say that word, but you know, coins like that you know in this next bull run will obviously see some upside again. Doge even. Meme coins, right? So anyway, that's kind of where my thought process would be, is just looking at that. And there's also some confluence there if we go over here to the weekly chart and we look at the fact that typically Bitcoin, when it breaks down, now once again, COVID crash, it did lose it, but it does like to find support on these 200 moving averages. And this blue one is the 200 EMA, which is the exponential, and this yellow one is the 200 SMA, which is the 200 simple moving average. I've explained in previous videos the only difference between the two is that the blue, or the EMA, just puts a little more emphasis on recent price action. But if you look at where those two are right now, the yellow one's down here at around 21 to 22,000, and the blue's down around 27. Well, as we know, as time goes on over the next weeks to months, these are going to continue to come up, right? They're going to come up and eventually level out. And that's kind of why I'm targeting, at least from an aggressive standpoint, this area, you know. And it could give or take 3 to 5%, of course. I'm not going to nail the bottom. But I think what I'd be more worried about is not getting into any positions at all, and Bitcoin, you know, comes down and just takes off, right? Now, of course, that wouldn't happen overnight, but the biggest thing is that I believe in crypto, and if you're in this space because you believe in Bitcoin and you believe in some of your cryptos, you just want to make sure you don't miss the next run, right? So that's kind of what I'm eyeing as far as the Bitcoin weekly chart goes, and the daily chart. All right, and then just as a final reminder in this video, I wanted to mention that patience is overall going to be your greatest tool when it comes to stocks and investing and crypto. If you have a long-term outlook and you believe in the space, just, you know, it's a good idea to eye levels, you know, where Bitcoin would historically bounce, some of these moving averages I've discussed, fib retracement levels and so forth, and just always remember to dollar cost average. That is probably the #1 risk management tool from a long-term investment standpoint that you can use. Is just never go all in at one level, always have a backup plan, and you should be fine. If you guys are liking the content, please remember to like and subscribe, and we'll catch you next time. It's TA